Hey guys, this Crypto Marisha does it all, a little bit of everything. Another bank went down, and in my opinion, I thought once the bank First Republic went down, crypto will be spiking up, but this is not what's going on. It seems like crypto is going through a bloodbath right now. So let's see what's going on. It says First Republic Bank is seized by regulators and sold to JPMorgan Chase. Sorry guys. As part of the deal, 84 First Republic branches in 8 states reopened as JPMorgan branches on Monday. So wait, they already sealed the deal and now they become JPMorgan? Regulators seized control of First Republic Bank and sold it to JPMorgan Chase on Monday, a dramatic move aimed at curbing a 2-month banking crisis that has rattle the financial system. First Republic is the second largest U.S. bank by asset to collapse after Washington Mutual, which fell during the financial crisis of 2008 and was also acquired by JP Morgan. You see, this is crazy. Now, was First Republic also associated with crypto? Because they try to blame all the other Silvergate and all the other ones because it had something to do with crypto. I didn't hear any mention of crypto and it still fell. So it was bad management. It had nothing to do with crypto. Founded in 1985 and the 14th largest U.S. bank as of earlier this year, First Republic assets were battered by the rise in the interest rate, and the company had struggled to stay alive after 2 other lenders collapsed in March, spooking depositors and investors. The takeover of First Republic by the Federal Deposit Insurance Corporation and sale to JP Morgan was announced hours before U.S. market opened and after a scramble by officials over the weekend. On Monday, 84 First Republic branches in 8 states reopened as JP Morgan branches. That was fast. Wow, this part of the crisis is over, Jamie Dimon, JP Morgan's chief executive said on a conference call Monday. For now, we should all just take a deep breath. Well, this is crazy. Investors welcome JP Morgan's takeover, sending the bank's stocks 3.5% higher Monday. The stocks of PNC Financial Services and Citizen Financial Group, 2 regional banks that lost out on a bid for First Republic, catch trade on down more than 5%. First Republic's shareholders and the debt holder will be wiped out in this deal, a typical occurrence when a bank is put in government receivership. The First Republic name in it a logo, a swapping eagle with its wings and a V-shaped formation will be phased out, and the bank's branch will become JP Morgan Chase outlets. This is crazy. President Biden also welcomed the takeover during a speech on small businesses on Monday afternoon. These actions are going to make sure that the banking system is safe and sound, Mr. Biden said from the Rose Garden. He added, while depositors are being protected, shareholders are losing the investment, and critically, taxpayers are not the one that are on the hook. The FDIC estimated that its insurance fund, which is made up of the fees banks pay the agency for insuring deposits, would have to pay out about $13 billion to cover the First Republic's losses. JP Morgan also said that the FDIC would provide it with $50 billion in a financial and that JP Morgan would pay $10.6 billion to the FDIC. Our government invited us and others to step up, and we did, Mr. Dimon said. He said the transaction was intended to minimize costs to the deposit insurance fund. The acquisition made JP Morgan already the nation's largest bank, even bigger and was already being criticized by some lawmakers. Since the 2008 financial crisis, regulators have tried to prevent the biggest banks from becoming more dominant. Ian Katz, an analyst at Capital Alpha Partners, wrote in a research note, JPMorgan's increase in size will displease lawmakers from both sides of the aisles, but be particularly granted to progressives who have fought against consolidation via M&A. First Republic fell despite having received a $30 billion lifeline from 11 of the country's largest bank in March. JPMorgan said the $30 billion would be repaid after the deal closed. The government's takeover and sale of First Republic come roughly 8 weeks after the government took control of Silicon Valley Bank and Signature Bank, whose failure sent a shockwave through the industry and raised fear that other regional banks were at risk of similar runs on deposit. Many banking experts said First Republic's travels were a delayed reaction to the turmoil in March rather than the opening of a new phase and the crisis. Investors and industry executives are optimistic that no other mid-sized or large lenders are at risk of imminent failure. Like the other two failed banks, Silicon Valley Bank and Signature, First Republic collapsed under the weight of loans and investments that lost billions of dollars in value as the Federal Reserve rapidly raised interest rates to fight inflation. When it started becoming apparent that those assets were now worth much less, First Republic's affluent customers, most of whom live on the coast, began pulling their money out as quickly as they could, and investors dumped its shares. The cardinal sin of FRC and SVB is they grew too fast when interest rates were near 0%, said Timothy Coffey, a bank analyst at Janney Montgomery Scott, wrote in a research note referring to First Republic and Silicon Valley Bank. There were likely others, however, it's a very limited set of institutions, as the vast majority of banks passed on picking up pennies in front of a steamroller. Again, Jesus Christ, it seems like it's keep on going. There's more stuff here. Even so, the U.S. financial system has plenty of problems. The recent bank failure and rising interest rates have forced banks to rein in lending, making it harder for businesses to expand and individuals to buy homes and cars. That is one of the reasons that the economy has been slowing in recent months. The end of the First Republic came after weeks in which the bank and the advisors sought either to save the bank or find a buyer outside of government takeover. But the effort fell flat. Other banks were reluctant to buy it or pieces of without assurance that they wouldn't be left with billions of dollars in losses. By last week, after an alarming earnings report in which the bank disclosed that customers had withdrawn more than half of its deposit, it became clear that there was no option outside government takeover. Late last week, the FDIC reached out to other financial institutions, including JPMorgan Chase, PNC Financial Services, and Bank of America, seeking bid for First Republic. Bidders had until noon Sunday to submit their offers as part of the bidding process. Banks were also asked what accommodations they'll seek from the government to move forward. People familiar with the process said the sales process was expected to be wrapped up by Sunday evening, but the announcement took place in the middle of night. JPMorgan's Mr. Diamond said the bank had 800 employees working on the deal over the past several days. The banking crisis has also put federal regulators on the defense by exposing problems that analysis said government officials should have identified and forced the banks to fix months ago. Last week, the Fed and the FDIC published reports criticizing themselves for failing to adequately regulate Silicon Valley Bank and Signature. The reports also blamed the banks for poor management and excessive risk taking. First Republic had many clients in the startup industry similar to Silicon Valley Bank and the financial industry, including senior bankers and the hedge fund managers. Many of its accounts held more than $250,000, the limit for the federal deposit insurance. The latest bank closure probably keep the Fed on track to raise interest rate a quarter point at its meeting on Wednesday, said Krisha Guha, head of the global policy and the central bank strategy team at Evercore ISI. In fact, he said it may clear the desk for such a move by taking away a lingering source of risk and uncertainty. Oh my God, it's so much. I think it's a little bit more. That's it, because it was, Jesus, keep on going, yeah. Let's see what is the last paragraph. But Mr. Gosha said that the banking issue were moving from an acute to a chronic phase. Other lenders may look at First Republic and the other recent bank failure and try to shore up their own position by becoming more cautious about lending. The microeconomic effects of bank stress may only be in the early stage of unfolding, Mr. Gosha said. Again, JPMorgan took over First Republic, and hey, good luck to them, and hopefully Jamie Dimon will make a difference. Subscribe and let me know how you feel about the whole thing. I didn't hear no mention of crypto, so they cannot blame this one on crypto. Subscribe.